Welcome to today's episode of Grow Your Wealth. We're incredibly excited to introduce our esteemed guest, Josh Manning. Josh is not only the founder of Manning Asset Management, a boutique fund manager based in Australia, specialising in private credit, but he also boasts an impressive background in the financial sector. Josh started his journey at Macquarie Bank, then moved to Jana Investment Advisors before establishing Manning Asset Management. His vast experience extends to originating and managing intricate investment products. Stay tuned as we delve deeper into Josh's insights, experience, investment strategies that can ignite growth in your own entrepreneurial journey. Welcome, Josh, to Grow Your Podcast.
Thanks for having me.
Let's start at the beginning. Can you give us a potted summary of who you are, what you're currently doing at Managed Asset Management?
Yeah, sure. So Manning Asset Management, established in 2015. We're a specialist Australian fixed income fund. I founded the firm and I'm currently the portfolio manager there. We run 3 funds targeting different risk-adjusted return profiles, all performing very strongly. And really benefiting from the high RBA cash rate, which is just putting, fixed income, private credit into the spotlight at the moment. But for me, it's always been a hugely attractive asset class, which really put me on this journey.
Yeah, got you. When did your fund launch?
I started in late 2015. The main fund started in April 16.
Gotcha. Yeah, I look at Manning Asset Management and yourself in the industry as a early, first mover, effectively. You think there's a lot of funds turning up the last couple of years. If you look back, if you started 2015, 16, even though in investment funds management term, it's not a long time. But when you look at that private credit space, you definitely an early mover.
Yeah. No, it's actually funny on that because now you say, oh, we do fixed income, private credit, great asset class.
Yeah.
So obvious it's a great asset class. But in 2015, you tell people, I'm going to go start this fund. And they say, like, why would you invest in that? That's a terrible asset class. So
yeah, I find
it's really come of age, I guess. Yeah.
For sure. And we started in 2017 in private credit. And yeah, it's similar, right? Everyone's an expert these days. But it's very good. Now, can we take a step back and walk us through your early career journey? Started in the early days. Like, did you work, people talk about working in a bakery, newspaper, paper rounds. Where did it all start for you?
I had a very prestigious start. I had a paper round in my local area. So I used to get up before school and do that. And I started very early and always sort of wanted to stand on my own 2 feet. Then did the usual sort of pizza, Domino's pizza for a while and different things along the way.
You still eat Domino's pizza?
Once you work there, you turned off it a little bit. So
fair enough.
Yeah.
Oh, that's good. And where did it go from there? Where'd you go to uni?
Yeah, I went to uni, Macquarie University, did a Bachelor of Business Administration there, doing finance, business law sort of specialisation. Really enjoyed that. Had a few jobs then. But it was really when I left there that I graduated, my real career started, and I got a role at Macquarie Bank quite early in a division that looked after their structured products. So these were products that were distributed to financial advisors, sort of institutions and alike that had some sort of capital preservation mechanism in them, and the structuring aspect to it. And that's where I really think the journey of my career really started off.
Gotcha. What year was that? Was that pre-GFC type?
Yeah, that was 2006, 2005.
That's great. Yeah.
So they're quite formative years. And I saw the really good time, the boom time where everything was going incredibly well. And, we managed a team. I was promoted quite early. I think I was in sort of five months I was promoted to running the team there.
Gotcha. Yeah.
And saw, unfortunately, the aftermath of the sort of problems that reverberated from overseas. And that was, it was an unpleasant time because clients went through a lot of distress and there was a lot of issues, but great for me in terms of a learning journey around, when you don't structure things properly or you don't sell things properly or portfolios aren't built properly, that there can be quite sort of serious consequences from that.
Understand. Yeah, the GFC was a great educational moment for people employed in the industry.
Yeah.
Very good. Now, can you share 2 or 3 pivotal moments that led you to where you are today?
Yeah.
A couple of turning points in your life and career.
So I think that time at Macquarie, being on the phone to clients who had lost a lot of their wealth, and then there was some that actually did structure their portfolios right, did go into the right products, and had that capital preservation mechanism.
Yep.
It really highlighted to me the importance of portfolio design, structuring, and making sure it sort of fits together in a holistic way. So not just getting the product right, but making sure the underlying attributes of how a portfolio actually works fit together in a cohesive way. So
Gotcha.
that was hugely informative. I think the other thing was in 2015, I started investing myself in fixed income instruments. We saw at that stage the market really opening up in terms
Mm.
of the range of options that you can invest in. So you
Yep.
could started being able to invest in direct loans, things like that were the sole domain of large institutions
Sure.
became available to the wider population. And I just looked at that and I started investing. I thought, wow, this is a great asset. I really enjoy this. I've got my structuring background. I've learned so much at the big end of town for Jana and Macquarie. I can bring all that expertise into
Mm.
this asset class where there's not a lot of managers or hardly any managers doing this, and do that in a pure play funds management boutique model where we're not sort of impacted by the sort of the bureaucratic structures and the complexity of large organizations. We
Mm.
can just be a pure play fund that extracts the most out of this asset class.
Gotcha. And what gave you the courage to make the jump from
Yeah, well,
big industry to being an entrepreneur and setting up your own
yeah.
funds management business?
I did. I did two things, which was really good. So the first thing, I actually wrote down why I was doing it,
That's pretty good. Yeah.
and there was only 3 or 4 points there, but it just wanted to help me understand, like, am I doing it for the right reasons? Like, I don't think you should ever go into business because you want to be well known or
Yeah.
wealthy or anything like that. There needs to be something a bit more behind it. Um, and it also just sort of got me through those times where things were taking longer and were
Mm.
harder. You could really reflect on, hang on, why am I doing this? And that gave me a lot of sort of strength. The other thing is I just spoke to a lot of people that I really respected, and there was definitely two camps. One
Yeah.
camp was, don't throw all this away. You're
Yeah.
on such a good path. The other camp were, if you have a great opportunity and you're saying that this is a sort of in your DNA a little bit, then, life doesn't always give you these open doors. And sometimes you just need to walk through it, even though there is a degree of risk there. Personal career risk, personal risk, I guess.
Yeah.
Yep.
That's great. I mean, in some respects, you don't want to look back and say, I wish I had. You've stepped out
Yeah.
and had a go, which is
Yeah.
brilliant. And the business I can see looking from the outside is growing really well. So,
Yeah. Yep. Absolutely.
which is credit to you.
Yeah. Thanks.
And okay, what are the top 3 people who have influenced you the most and why?
Yeah. So, um, I'm really lucky. My dad's, he immigrated to Australia. He started an IT company that was very successful, sold to a multinational sort of later in his life. So I had that sort of entrepreneurial sort of side, and could see, one, how tough it is, but also just some of the, ways you got to think about different aspects.
Yep.
And then the second is my mum's a psychologist,
Yeah,
so
okay.
she's sort of been very influential in helping me understand people, and I think people is
Yeah, for sure.
probably the biggest area of growth, and our success has been based on those softer skills and understanding people. So they've both been hugely influential. I've had lots of great leaders through my career, but I think the other thing is, it's not a person, but my favorite pastime is actually like autobiographies, learning
Yeah,
about
for
people's
sure.
lives, and
Yep.
even people that are not well liked often have these incredible journeys, and I
Yeah.
just love learning about people's success stories and failures, and yeah, I've learned a lot through them, and it isn't all glory and
Yeah, for sure.
success day one, and but I get a huge amount of personal growth out of hearing their stories.
Gotcha. Yeah, I just finished reading Winston Churchill's
Oh yeah,
biography.
yeah,
Do you have a favourite
yeah.
or just general?
I, I think Kerry Packer's got an
Really?
amazing story. I just love that he was the, he was the, Clyde was the golden child. He was going to be
Mm.
the heir, and Kerry was, cast off to the side a little bit. His father didn't see him at boarding school, and he was just told come in at grassroots and the printing presses, worked on the printing
Mm.
floor, and worked his way the whole way up. And then Clyde decided, hey, this isn't for me. And Kerry was there, and he didn't have it easy, and he fought away, and he really made a huge success of himself. So I love that story. It's like that perseverance that, I'm just going to make this happen for me, even if the powers that be, which was his father, was saying, no, you're not the chosen one. So I think that's an amazing story. Like I just finished watching the Bernie Ecclestone
Yeah,
story.
yeah.
Like that's amazing in many ways. So yeah, there's lots of great things, and I think it's just picking, a couple of lessons out of each person's life and sort of trying to incorporate that into your own.
Yeah, it sounds brilliant. So you didn't have to look far for your mentors, mum and dad. It's
Mum and
pretty good.
dad, yeah.
So interesting you mentioned about your mother as a psychologist. It's like the industry you're in, you're a fund manager and
Mm,
your investors are your clients, right? You got the
mm,
customers. So
mm,
if you don't have that skill set to
mm,
manage relationships and build a rapport, you don't have a business,
mm,
right? You can be a
mm.
great fund manager. If you're not good with customers, then you don't
Exactly.
have a business.
Yeah, exactly. And our business, as you know, is all about judgment.
Mm.
And a big part of that is judgment about people and CEOs and people who look after different aspects of businesses. And I think having insight into them and understanding them, what makes them tick, is crucial. And we don't make decisions based on that, but that's an important part of the overall picture in terms of are we comfortable or not.
Yeah. Sounds good. Some of these questions sort of overlap a little bit, so
Yeah,
we'll
yeah,
just
no
dig in a little bit
problems.
deeper. Yeah, but between Jana, Macquarie, and now Manning Asset Management, you've had a varied career.
Yeah,
What was the biggest shift you made in your career that led you where you are today?
yeah. So I guess it would be, when I was growing up, I always had little entrepreneurial businesses on the side, and listen, some of them probably aren't that prestigious, but
Mhm.
I loved sort of creating value and doing little side hustles and things like that in my school years.
Gotcha.
Um, but definitely the biggest shift would be going out on my own. I
Yeah,
mean, I'd
for
always
sure.
been in corporate. I've always had a steady paycheck, a
Yeah.
team, and to sell up, sell assets, put your money on the table, and
Mm.
say, well, this is what I'm willing to put behind it to make it work.
Yeah.
And then I also, for the first period of time, I managed my own money, so I
Yeah.
was I was fully in both in the equity and also in
Mm.
the portfolio. So that was a huge shift, and yeah, it took some acclimatization. That's for
Yeah.
sure.
That's the alignment of interest, though. Your
Yeah,
investors looking for.
yeah,
They want to know have you got your money in there,
yeah, yeah,
so they can come along beside you,
yeah. Exactly,
which is great.
exactly.
Now bumps along the road. What's worked and what hasn't, and what has been the learnings from it. Because
Yeah.
it's important in our industry. You always take hits. You need to be resilient.
Mm.
If you've got a few examples, it'd be good to hear about them.
Yeah, so what's worked? Like the funds have worked fantastically. They've been hugely successful, both in terms of investor appetite, but also performance delivered to them, being sort of true to label, delivering what's on the tin. What hasn't worked? I think when I came out, I thought, you know, if you're my customer, if I can deliver you a great product that is just far superior than other things in the market, you will buy it,
Mm.
and that's the number one objective. And that has never changed. But what I didn't appreciate was that, selling to institutions, there is career risk. That
Mm.
is a challenge because yes, there's lots of people that say, Josh, I know you, I like you, I respect you. But are they willing to, put a big check behind you,
Mm.
take that career risk? Because if they get it right, yeah, they get a pat on the back. They get it wrong, they might get sacked. So,
Mm.
there's not the risk return payoff for an individual in an institution is not skewed in your favor. The other thing I probably didn't appreciate is just bandwidth, trying to
Yeah.
get people's airtime to to educate them on the asset class, educate them on the fund, why we're different.
Mm.
That was definitely challenging. So I learned that probably those that have those two issues the most, being typically larger organizations, they are not going to be early adopters. They're not going to be the
For
ones
sure.
that back
Yeah, I
me.
agree.
And I thought, I was probably a little bit naive thinking, no, but surely the investment merit will win out.
Yeah.
They'll see what I can see. So that just made me more work with who are the early adopters, and they're
Sure.
high net worth, sophisticated investors that could get behind it. I guess the other thing that, what hasn't worked or worked, I mean, the one thing we didn't do, whether it was opportunity, whether it was conscious decision, probably a mixture of the two, was we never got a corporate backer that took a big slice of the business and distributed the product. Now, we could be a lot bigger if we had have done that, but we also won't be completely, all we need to worry about is delivering for investors right now.
Gotcha.
We don't have any other corporate objectives, sorry. So we're unfettered in that pursuit. So it brings complexity, but then, financially, maybe it would have been better. I guess for me though, like this isn't about a financial objective for us. This is about, playing a role in finance and delivering value. So I think net, I'm glad we haven't, but you never know what
Yeah.
where you could have been, I guess.
You never know. It might be coming.
It could be coming.
Yeah.
You never know, right? You never know. You never shut your mind off to what else is out there.
It's interesting you talk about the client base you targeted. When you're building a business and you ring someone for a meeting and they say, look, happy to meet you, but it'll be in 3 months' time. It's about that point you say, that's not my client.
Yeah, exactly.
I'm speaking of the wrong type of client. I want someone who can meet me, 2 weeks. But that's it's smart, right?
Yeah.
And I'm sure those people that weren't clients in your early days, they're probably clients now.
Yep.
So you just got to target the client that's ready for you at your time of your business development.
Exactly. Yep.
Okay, now we'll pivot to Manning Asset Management,
Yep.
your business that you built from the ground up. Where did the idea come from? And what do you do differently, and why do you do it that way?
Well, the idea came from was one, I was investing in these instruments and these assets, and I'm like, this is equity-like return with capital stability. Like this is just the best asset I've seen, so I got really excited about that. And I saw a lot of ability to add value. And that's what made me excited about investing is, hey, I can really add value to end investors through what I know and how we invest. The other side of it was, Jana, we couple $100 billion under advice, advised many of the biggest institutions in Australia. In their portfolios, I saw a real need for this type of asset class as well. So I just thought there's this great opportunity and this great asset class. They just need somebody to bring it in a funds management type context and deliver it to them. So that really got me started down that journey.
Yeah, it makes sense. I mean, that's the thing in our market. The big institutions can get great access, but the investors, high net worth family offices that you talk about, it's always been hard for them. So they need
financial advisors as well. Like sometimes by the time they're getting a product, there's so much that's been structured out of it. I also think a lot of listed market products have been optimized by investment banks and deal structurers, and they're just taking all the return out. Yes, they add some sophistication, but by the time high net worths get it, and there's not a lot left in terms of upside.
Yeah, I mean that's what I'm liking about the industry in private markets these days is, the average investor now has a pathway to get access, and your fund's a perfect example. Now, what problem are you solving? You've answered this to a degree.
Yeah. Well, it's access, absolutely. Yeah. It's giving investors an investment option which can deliver, as I say, equity-like returns with capital stability that's managed by a highly specialized team. So the team that actually manages it has individually decades of experience doing this exact thing. So we picked what I think are the best people out of the big banks. So we picked the CEO of Royal Bank of Scotland, who was a very big structure and issue in the Australian market. We picked the ex-head of debt finance from Macquarie Bank, He's on the investment committee, one of the top credit people from Bendigo and Adelaide Bank, who was a very
Right.
large participant. So there's a huge amount of longitudinal experience and sophistication, so we can essentially pick up everything that the big institutions do, learn, understand, and apply that in a tailored fund. So yeah, so I think there's a huge uplift in terms of the investment merit. And then in terms of specialization, we really, across credit in Australia, you see like leveraged finance buyouts,
Yep.
you see listed market bonds, you see securitization, asset-backed securities. So there's a range of different areas. We really specialize in the asset-backed security space. We just think, if you look back through the decades, that has been the one asset class where covenants, protections have been quite consistent through time. There hasn't been really covenant light in the good times that has led to problems in the down times, and just is a far more resilient part of the market. So for our investors who want capital stability in a through the market fund with a high level of return, that is the perfect asset in our view. So we're very deep specialists in that area. And we're not trying to sort of do everything to everyone. Like we got 3 funds, all of them focus on that. That's all we do, and we think we can deliver, a superior outcome through
Gotcha. Totally agree with you there on the asset-backed investing.
Yeah.
It's very aligned on thoughts on that one.
Yeah.
And I liked hearing earlier the alignment of interest. When you first started, a lot of your own capital was in the fund.
Mm.
So this question is, where did your first capital come from?
Yeah.
Obviously, it came from you.
Okay, for
But
me.
who was next, and who supported you along the way?
Yeah, so it's the typical sort of route of my money. We then had some friends and family. So it was actually quite interesting. As my current wife, we were actually just friends at that stage. It was people like her who said, out of everyone that I trust, you're up there. I'm happy to back you. So that was great. That only obviously gets you so far from a funds under management perspective.
She might have thought it improved the marriage prospects as well.
Potentially, yeah. She didn't need to worry about that, but so that got us so far. And then the other part was I did have the opportunity to speak to some professional fund managers, and I just told them, like, this is what we do, and this is how we invest. And a couple of them turned around and said, this is great. And one like quadrupled the size of the fund in his first application.
Yeah, great.
So he obviously thought, hang on, there's something here, and that just sort of got the ball rolling, I guess.
Yeah.
There's obviously a huge mix of investors from high net worth individuals right up to charities, ASX listed companies and alike who invest in the fund.
Yeah. It's good to hear, right? When you're starting off as an entrepreneur, building your own funds management business, the friends that pop out of the woodwork to help you out and, get that kick along in your first year. So
absolutely. Well, like people, I think the big thing for me, like it was just surrounding myself with great people. Like that was just the absolute key, whether they're clients, whether they're sort of advisors, people on the investment committee and alike. That's the number one thing.
Gotcha. In your view, what is the secret to maintaining competitive advantage?
I think people, having the best people in the business around you, that has to be number one. I think you've got to personally stay hungry and stay focused, and it's very easy to sit back and say, wow, look what we've done. This is so great, but just staying humble and pushing to always be the leader at what you do in every aspect. So I think that humility, that personal side, but yeah, absolutely just finding the best people to get around you and align incentives, cut them equity in the business, do things like that incentivizes them to promote your best interest and your investors' best interest. And I think if you can do that and not be greedy or try and be too short-sighted, that things do move in the direction you want them to.
Sounds good. I mean, when I think of investing, founder-led businesses is where I start, right? So I totally
absolutely
get it. This can be your personal approach, but it's also professional. What is your investment approach to drive long-term wealth?
Um, yeah, so I think so from a managing asset management
Yep.
perspective, the number one thing is you just don't lose money. That's what we base our whole business around, just not losing money. And if you do that, then you're ahead of the pack instantly.
Sure.
I think from a broader context, how I invest, philosophically, we sort of I think about it in a few different ways. One is looking at every investment and thinking, how bad could it get?
Yep.
Like, could I lose 100% here? So
Yep.
what is the downside? Second is, what's the chance of that happening?
Yep.
And what's the upside? And is that appropriate for that potential downside? And then just assessing that against other alternatives that you can look at. So yes, you can do models, you can do all sorts of things, but sometimes they can be a bit more. They more want to tell you what you want them to say
Mm.
because you've got a bias. I think you
Yeah.
really need to start with, yeah, as I say, how bad could it get? How likely is this? And am I getting compensated?
Yeah, it's key.
Yep.
Yeah, it's key. It's at the risk return assessment. You
Yeah,
prefer to have a lower return for a given risk than, a higher return for
yeah,
sort of a disproportionate risk.
absolutely.
That's how you got to assess things.
Absolutely. And you put a little bit of leverage on there. Something where you might be able to get 50 cents back, you can go just by a bit of leverage, you can go to getting nothing back.
Yeah.
So, like, just being careful about these things. Yes, it's lowly geared and there's all sorts of rationale around that, but it does quite substantially change that outlook.
Now, can you share your tips on, you've been in business since around 2015,
Mm.
16, so 7 or 8 years. Can you share your tips, to listeners on how they should go about building a business?
Yeah, so I think the thing for me is I found something I loved and I was really passionate about, and I used to spring out of bed in the morning and I used to go home late at night because I loved what I did, and I was able to find a way to do that in a way that other people found attractive and therefore willing to pay for it. So that was the key thing, just something that naturally motivates you and isn't
Gotcha.
just attractive from a potential profit perspective. You got to really love what you do. Surround yourself by great people. Um, yeah, I'm
Passion's a good one, your first
passionate.
one, right?
Yeah,
If you don't have passion, there's
yeah,
no starting a business, right? That's a good
exactly,
point.
exactly. And go to people who are knowledgeable in the industry and ask them, what do you think?
Yeah.
Would you do this? How would you do this? I mean, when we started out, I knew quite a few things, but then there was other things. Like a good example is fees.
Mm.
So it was, well, I know I need to charge this much to make it worthwhile, and that's fair from a competitor perspective, a value, what value we deliver versus what we charge. But do people want that all performance fee?
Yeah.
Do they want that all base fee? And I went around to lots of sort of CIOs of big super funds and big investors
Mm.
I respected, and I said, well, what would you want to see? What would you
Yeah.
want to do? And the great thing is they actually basically tell you what you should do, and then it's just a matter of weighing those things up. And I think going through that process and going and talking to people, and there was many people who I didn't even know, and I just asked them, could I buy your coffee?
Yeah,
And they would say
sure.
yes. And that's the amazing thing I think about Australia in this industry.
Mm.
People are genuinely out there to help others if you approach it in the right way.
Yeah, I totally agree. I think back to the early days of my business, our term sheets. I was actually getting some of my investors to look at my term sheet and helping me draft them
Mm,
effectively, and they were
mm,
very happy to do so. So you'd
mm,
be amazed if you just tap your networks,
mm,
how valuable they can be, and particularly starting a new business, how keen people are to help you because they
mm.
understand there's risk in starting your own
Yep,
business.
yep,
So I think you make a very good
yep.
point. Now, this could be again managing asset management, personal life. What has been your best and worst investment, and what did you learn?
So my best and like the funds that we've done have been fantastic. That's definitely been my best investments. I mean, we've done a lot of equities investments and alike. I think that's a little bit different. They've done well, but the
Mm.
fund I think is just such a fantastic risk adjusted return.
Yep.
Yeah, I've had bad investments, that's for sure. I think the way to characterize those would be where they are. typically small investments. So I don't invest as much time as I should in doing my own research. And they're based on a recommendation from somebody else. And it's just been, yeah, they think it's a good one. It's only small. I won't put that much time in it. And then you don't monitor it. You don't think about it. And before you know, there's a problem and you're just, lining up behind somebody else to get out. So there's been a few of those. You probably only need to learn that lesson a couple of times before you think twice about it.
Right.
But I think that the learning is you've got to do your own research.
Sure.
You've got to go below the glossy brochure and either invest with people you trust, like a iPartners platform, you get to know that and you trust that, a fund like ourselves. Or you need to be, going right down to the grassroots level and saying, actually, what is this, the most basic level? How does this work? And that takes time and effort and some level of domain expertise. But I think unless you're willing to do that, you're sort of just a bit of a hidden hope type strategy, which
you mentioned earlier, just understanding that downside is the key. But you do learn tips from your mates, that typically don't work. When it comes to investing, your mates are good for hanging out with, having a beer and bouncing ideas off. But if your mates aren't in the finance world and they've got the hot tip from a friend of a friend or a taxi driver,
that's right.
It's normally a warning sign. Now, what do you believe are the keys to success and why?
Keys to success, I think hard work. I think that's key.
Yep.
Going into it with the right motivations. And what else would it be?
You already had a few good ones.
Yeah, hard work, going into the right incentives. The other one was really backing yourself. That's key. You've got to, there will be rainy days. When you started out, the first 6 months, you probably have, 3 rainy days and 2 sunny days. And then the next 6 months, you have 2 rainy days and 3 sunny days. And it's sort of slowly gets a bit easier and a bit better. But, it's tough. It's not easy to start a business. You don't just get handed things on a plate, and it's always harder than what you think. And you just need to just make sure, go back, think about why you started it, go through your reasons that you listed down, and just back yourself and put your head down. And, if it's not working, then yes, be realistic. But you've got to have that self-confidence and drive.
It's confidence. You've got to have that confidence to keep backing yourself when it gets tough.
Yeah. And there's plenty of people who said to me, don't do it. This is not a good idea. But, you've got to weigh that up and understand and assess. But if you don't wake up the next day with as much fire in the belly, then you're not going to be successful in that chosen sort of endeavor.
Totally agree. And now, what legacy are you living and leaving? Big picture.
Big picture. I mean, we're trying to, for us, we're trying to make our clients wealthy or wealthier. That's number one. That's what the business is about. Yep. For staff, it's really around providing an environment where they can, achieve their career aspirations. So that's quite a big part for me, is understanding that and providing that environment. And then, for shareholders, there's been plenty of people that have backed us, and we do, that is a focus to make sure that they are fairly sort of rewarded for backing me early on. So the legacy will really be looking after clients, employees and shareholders. And then for me, I want to, provide a sort of hopefully something for my children to say, if I want to be successful and if I want to do what I want to do in life, then, seeing, my mum and dad do that as role models gives them the confidence to go on and do what they want to do in the world. So that's probably obviously the most important to me, providing that role model type thing for my kids. But it's a few aspects to it.
Yeah, for sure. How many kids you got?
Just the 2.
How old are they?
3 and 5.
Oh, good on you. It's tough.
It's tough. It's getting easier.
Yeah. Good. And what do you like doing outside of work?
I love spending time with the family.
Yeah.
I love, one of my other hobbies is I love building things like carpentry,
No, I
like
got you.
building furniture and different things,
Cubby huts.
cubby houses, things like that. I also love mechanical things. I was sort of toying with the idea of being an engineer and architect early on. So, pulling things apart, fixing them. I just I love the challenge, the mechanical challenge of that sort of stuff. So
It's good to have something outside of work.
yeah, my wife doesn't like it too much because I'm constantly outside, pulling things apart and telling her I can't come inside for a couple of hours until I work it out.
As
But
long as you're not pulling the family car apart and she
and
can't drive it.
I haven't quite endeavored on that. But no, just smaller things. But I love that being outside, and my kids are starting to get to an age where they're interested in doing things with me. So it's a really rewarding
That's great.
time. Yeah.
Very good. Okay, we're getting to the back end of the chat. Now we're
Okay.
going to go for sort of one word short answers.
Yep.
And a punch out 8 quick questions.
Okay.
You've actually answered this one, but let's run it again. What was your first job?
Yeah. Paper run.
Yep. What's a piece of advice for your younger self?
Surround yourself with good people.
What motivates you most as a person?
Creating value.
Gotcha. What's the most important skill for building wealth and why?
Number one is being able to understand incentives. That is if there's one message everyone takes out of this, understand incentives. That's the key to this whole investing game, I think.
Gotcha. What's the most important habit for building wealth and why?
Most important habit would just be doing your own research and making your own decisions, not relying on others.
Gotcha. Makes sense. What's your definition of sustainable success? How are you achieving it and how can others?
Definition of sustainable success would be just learning to always self-improve and advance yourself and develop yourself, I think is the key one.
Gotcha. Makes sense. You've actually answered part of this one. We'll dig into it again. When you're not working, how do you like to spend your time?
With my kids,
Yep.
building things outside, mountain biking, running around, typical dad type things.
Perfect. What's the biggest mistake people make when it comes to building a business and why?
Not appreciating how hard it will be and how long it will take. And I think because the business plan suggests it can happen, it will happen. It just, you just follow this path. Unfortunately, the reality is something happens, things don't work out, stuff takes longer, things are more expensive. So that's the biggest mistake, just not realizing how hard it is. Doesn't mean the business plan won't work.
Yeah. Yeah, you hear that all the time. Everything takes longer than what you expect. You just got to keep punching through, really.
But sometimes you're better off because of that, because you do think harder
sure.
about it, and you do work harder for it and build something better to make it work. So not necessarily a bad thing.
Totally. Final question, what's next?
Hopefully, Travis, I'm still managing the 3 funds in 10, 20, 30 years' time. I love what I do. It's fantastic. We've got, I talk, we present to charitable clients and they tell me about, your income's done this. And, it's very rewarding to see that we're delivering real value, but also we are making a difference to our investors. And that's kind of why I started, right?
Yeah.
To be able to deliver value. So, hopefully nothing.
That's great. Good to hear. I mean, it's been great from the outside watching your business grow. As I mentioned earlier, obviously an early mover in this private credit fixed income space. So very impressive how you've built the business. So congratulations.
Yeah, thanks for that.
So thanks for coming in. If you're interested in learning more about Manning Asset Management, visit their website, manningam.com. We'll include a link in the show notes. But thanks again. Appreciate you coming in.
Thanks, Travis. Cheers.
Good on you. Well done.
Thanks, mate. That bit where I got stuck